Okay. So if you can recall from chapter number 1, pay model. Okay, so there are three techniques, three building blocks of the pay model: objectives, okay, techniques, and what are the third one about which we are learning throughout the semester, throughout the syllabus? Yes, three building blocks of a pay model: objectives, techniques, and okay. Anyone from online class? What were the three building blocks of a pay model? Policies. Okay. Yeah. So okay, very great going. But anyway, we'll do our duty. So from chapter number 1, okay, so we learned a pay model. Okay, three building blocks of a pay model are objectives, policies, and techniques. Okay, and that is what is a compensation system of an organization. Okay, so we are learning, the syllabus is mostly focused on the policies of the pay model. So in those policies, there were 4 policies in total. Okay. So what are those 4 policies? Who can recall? Yeah, first was internal alignment. Okay. So all employees in the organization will not receive the same salary. So what is the organization structure? What are the different levels? What is the pay at each level, and what is the pay difference between each level? Okay. Then external competitiveness, compared to the competitor's salary. Okay, how much this company is paying compensation to its employees, which will make it either attractive or unattractive to new candidates. Then third policy is
Employee contribution.
employee contributions. Okay, so third policy was employee contribution. So can you see this on the screen, students online?
Yes, sir.
Okay,
Yes, sir.
so yeah, this is a third policy in the pay model, employee contributions. So in this chapter, we are going to learn how individual pay are determined, okay, using employee, based on employee contributions. Okay. Yeah, so chapter number 10 discusses a pay for performance plans. Okay, so employee contributions means, as we have learned, okay, so employees work and contribute towards achievement of organization goals. Okay, our employees individually perform and collectively organization performs. Okay, so based on how pay can be determined based on the performance. Okay, so this is the second chapter with respect to this. Okay, in this chapter, what we are going to learn is, okay, what are the different pay for performance plans. There are some plans which are practiced by the organizations while determining pay for performance of the employees. So this chapter is more specific about the different types of plans that are used by organizations to determine the compensation based on performance. So we are going to learn most of the types of pay for performance plans. So I hope the concept is clear before the chapter. If you have any doubt, you can ask now before I begin the chapter. Okay, so if there is no question, then let me move to the chapter topics. What are we going to learn? So as I mentioned, first we learn what is pay for performance plan. Okay, then second topic is specific pay for performance plans. Basically, short term we are going to discuss. So, okay, just two topics we are going to cover. One is what is pay for performance plan, and second is what are the different types of pay for performance plans. Okay, for short term. Okay. So pay for performance plan signal a movement away from entitlements. So entitlement is nothing but the fixed component of the compensation. Entitlement is nothing but the fixed part of the compensation. So what is the fixed part of compensation which doesn't change and which the employee gets for every pay period? Yes? Yes, say it loudly. Yeah, basic salary. Salary word we should not use when we say component. Okay, because we're talking about components of salary. Base pay. We call it base pay. Okay. In India, it is commonly referred to as a basic salary. Okay. So base pay is the fixed part of any compensation for which the employee is entitled for each pay period. Okay. Generally, the pay period will be 1 month. Okay. So pay for performance plan signal a movement away from entitlement. So what the employees earn other than the fixed component. Okay. That is indicated by pay for performance plan. So I hope you are able to understand. Pay will vary with some measure of individual, team or organizational performance. So what they earn in addition to fixed component, what the employees earn in addition to basic salary. Okay. So we are talking about incentives. Okay. So what employees can earn in addition to their base pay? So far we have considered so many points. What an employee earns in addition to the base pay? Incentives, bonuses.
Incentive.
Very good. Incentives, bonuses, okay, allowances. Okay. And when we say incentives or bonuses, they are related to performance. Okay. So the performance may be individual. Okay, so in case of sales representatives, okay, most of the times the performance is measured in terms of individual achievement or team performance. Okay, so in some other organizations, they make the employees to work in a team and the target is assigned to the entire team. So either everybody earns in the team or everybody loses in the team. So what are the example we considered? Whole Foods Market in corporation, the retailer which sells only organic food products in US. So they have made teams of 8 to 10 employees. The whatever target is given to employees, if the team achieves, everybody in the team is entitled for additional revenue of $1 to $2 per hour. If the team does not perform, everybody in the team loses that additional revenue or salary. Or organizational performance. Generally say bonus is paid when the organization achieves some exceptional performance. Okay, so bonus is distributed to all employees. So in that way, pay. So to the base pay, this additional income will be added. So pay will vary with some measure of individual, team or organization performance. So on what basis that pay is given? Based on some measure. So what measures are used? Okay, definitely in each plan we are going to understand what measures are considered in each plan to determine pay for performance. So I hope the concept is clear. So I spend a lot of time on first couple of slides so that you can understand. Okay, if you don't know which road you are taking, okay, and simply blindly you go on moving, okay, you may go anywhere. Okay, so rest of the journey will be easy. Okay, if you catch the right road. Okay, you will reach the right destination. In the beginning itself, you take a wrong turn, okay, you will never reach the destination. Same way in each subject, each unit, each chapter, I keep on reminding you in which part of the syllabus we are into and how it is related to the main part. So throughout this syllabus, you can see that it is all the chapters are related to pay model. That's why I keep repeating, reminding you about the pay model. Okay, now specific pay for performance plans, short term, for short term. So these are the four pay for performance plans, we are going to learn merit pay, lump sum bonuses, individual spot awards, and individual incentive plans. Okay, so let's make a beginning for the first one, merit pay. Okay. Yeah. So merit pay system links increases in base pay. I repeat, a merit pay system links increases in the base pay to how highly employees are rated on a subjective performance evaluation. See, this may be done in the form of an increment. Say, for example, a teacher's or government employee salary, what happens? Every year, an annual increment is given to the employees. Okay, most of your parents might be working. Okay, so you can ask them. So, at the end of each year, okay, the employee is given an annual increment. That increment is added to the base pay or basic salary. Then the overall allowances are calculated on the new base pay or new basic salary. So that is what it says. A merit pay system links increases in base pay to how highly employees are rated on a subjective performance evaluation. It means the employees are evaluated before awarding this merit pay on some criteria, some measure. Okay, but the issues, okay, that are involved in adopting a merit pay to pay for performance, the first one is it is expensive. Okay, because the increment, okay, say for example an employee salary is 25,000, okay, and the annual increment is, let us say, 1,000 rupees, and the basic salary is, let us say, 12,000 rupees, 10,000, let us consider 10,000 rupee basic salary, okay, and 25,000 is the gross salary, and the annual increment is 1,000 added at the end of the year one. So 10,000 basic salary plus 1,000 increment. What is the new base pay now? 11,000 rupee. So let us say, yeah, the employer is paying, let us say, 25% allowances on basic salary. So in the old pay, for 10,000 rupee, 25% is 2,500 rupee allowances were given earlier. But now, after adding the new increment of 1,000, the basic salary is 11,000 rupees, 25,000 of, sorry, 25% of 11,000 rupees. How much is that? 2,750 rupees is the additional allowances. So 1,000 rupee basic salary, 250 rupees additional allowances. And wherever basic salary is considered to calculate some other allowances, it will increase. So in that way, and over a period of time, it goes on accumulating. Okay. So that way, merit pay is expensive, and it doesn't achieve the desired goal, that is improving employee and corporate performance. See, we do understand the productivity of the government employees and many other sectors, okay, is very poor. Why? Because everybody is ensured an increment at the end of the year. Okay, so that merit pay is entitled for all the government employees, okay, and all the other employees in some other sectors. So what happens with respect to that? When everybody knows that they are going to get the annual increment, with or without performance, the employees will work in a very neutral way. So due to that reason, it doesn't achieve the desired goal of improving employee and corporate performance. Employees continue to put same amount of efforts. Why? Whether you work or you don't work, one annual increment is assured. Okay. So any questions here? Merit pay. What is merit pay? Very simple example I gave you. How to a basic salary and annual increment will be added, and how the total pay increases. Okay, along with base pay. Then what are the issues with the merit pay? It is expensive in the long term, and it doesn't achieve the objective of improving individual or corporate performance. Any questions? Yeah, students online, any questions?
No, sir.
No, sir.
No, sir.
Yeah, okay then. Yes. For example, it is. When your base pay increases, okay, but annual increments are depending on your total basic salary. Okay, so along with your base pay, amount of increment also will go on increase. Yes. Yeah, those who have higher salary, their annual increments will be higher. A person who is drawing 60,000, his annual increment will be X amount. A person who is drawing 1,20,000, his amount will, annual increment will be double of that. Okay. Okay, so some issues related to managing merit pay. Okay. The first, improve accuracy of performance rating. So if the organization wants to achieve the objective of improving individual and corporate performance, they need to improve the accuracy of performance ratings. So some measure is used to evaluate the employee performance. Okay, based on which some increment will be given. Okay, so what happens in unprofessional organizations? Okay, these performance ratings are not very accurate or standard. Just for name sake, self appraisal and performance appraisal is done and it is dumped into the file. That's it. So that way it should not work. So the company should improve accuracy of performance ratings. Okay. Then allocate enough money to truly reward, okay, performance. Okay, so the organization should not hesitate. First thing, okay, the first thing and the most important is improve accuracy of performance rating. So what criteria that are being used to evaluate performance of an employee should be accurate and standard. Okay, it means the performance appraisal should be professional and very systematic, okay, and legitimate. And when an employee exceeds the performance, the company should not hesitate to increase his or her pay. And that is what will motivate the employees. Those employees who get the performance pay will also get motivated and they will continue to perform high. And it will motivate other employees also who are not performing well. They will learn that only if they perform well, they will get the increment. Because the performance ratings are very accurate and the performance appraisal is done in a very systematic manner, and company takes strict decisions based on the evaluations. Otherwise nothing will change. Okay, make sure size of merit increases. Make sure size of merit increase differentiates across performance levels. Say for example, okay, so there are 3 employees, okay, in sales, among sales representatives, one who has performed only up to 60%, second employee has performed exactly 100%, third employee has performed, let us say, 140%. Okay, now if we consider the last 2 employees, one sales rep has performed up to 100%, another has performed 140%. Can you pay the same incentive to both? If you pay, what will happen? Yeah, the person who has performed exceptionally well, yes, will be demotivated. And it is not only him. The entire organization employee will learn that, okay, you perform only up to 100%, because whether you perform 100 or 140%, you will get the same performance pay. Okay, so make sure the size of the pay increase differentiates across performance levels. Okay, so that was about merit pay. Okay, so I repeat, that the first, pay for performance plan, merit pay. So this is easy to understand. Okay, it is not complex. Okay, but upcoming plans, okay, some especially individual incentive plans are slightly complicated, but anyway, I have made them easy for you. Okay, so second type of pay for performance plan, which is, okay, there are different plans, and depending on the circumstances, companies adopt certain plans, or they may even combine some plans. Okay, second pay for performance plan is lump sum bonuses. Okay, so lump sum bonuses are increasingly used substitute for merit pay. Okay, so what is the lump sum bonus? One time payment, okay, in whole. Okay, so every year some amount is given to those employees who perform above the standards or up to the standards. A lump sum amount separately it is given. It is beneficial or less expensive over merit pay. Why? It is paid only once in a year and it doesn't become part of your base pay. You heard me? Separate amount is given. Okay. So separate amount is given for the employees who perform or exceed the performance standards and it doesn't become part of the base pay. That's how it is less expensive compared to merit pay. So it is increasingly used because of its advantage over merit pay. Merit pay is expensive in the long term. Okay, but lump sum bonuses are paid. Okay, only once in a year, but a lump sum amount is given and it doesn't become part of the basic pay. Not built into, yeah, that is what I was trying to explain. Not built into base pay, or does not become part of the base pay. So what amount is paid is only for that year. Okay, in the long run, it is not. It doesn't matter. But merit pay, whatever increment is given, okay, it matters over the tenure of the employee. When viewed as less of an entitlement than merit pay. Okay, viewed as less of an entitlement than merit pay. Entitlement is, okay, it is fixed. Employees are entitled to pay, entitled to receive. I'm sorry, employees are entitled to receive. So what example I gave in merit pay, the example of increment. I hope most of those parents, okay, your parents who are working, definitely you will know that every year they get an increment. Okay, even I get, we all get here. Every year the increment is given. So it is more like a entitlement, means which you are, okay, definitely about to receive. You will get every year. So lump sum bonuses are viewed as less of an entitlement than merit pay. But payment of lump sum bonus is not mandatory like annual increment. That is what it says. Payment of annual, okay, lump sum bonus is not mandatory like annual increment. So therefore it is viewed as less of an entitlement than merit pay. Entitlement means compulsory, fixed. Okay, you should know that. Okay, less expensive compared to merit pay over long term. I have mentioned and elaborated how it is. Less expensive compared to merit pay over long run. That is all. That point already I have explained. Okay. So less expensive than merit pay over the long run. How? I have already illustrated or explained. Okay. See, this is how. Okay, this is the illustration. So when I say lump sum bonuses are less expensive compared to merit pay over long term. Okay. So here is an illustration. So these are the calculations. And this is the merit pay and this is the lump sum bonus. So assume the base pay of two employees in two different organizations. One company adopting merit pay plan, another company has adopted lump sum bonus plan. So how over a period of time, okay, the cost to company increases when it uses merit pay. So base pay is $50,000 in company 1. Company 2 also the base pay is $50,000. So year 1 payout, let us say annual increment at 5%, $2,500. 5% of 50,000 is 2,500. Okay. Now, what I said in merit pay, the annual increment or that pay for performance becomes part of the basic salary. So 50,000 plus 2,500, 52,500 is a new base pay or basic salary. Okay. And what is the extra cost to company? $2,500. So at this stage, even lump sum bonus, the cost to company is same, but only at this stage. See, 50,000 is the basic salary, 5% is the payout. Okay, and the amount is $2,500. Okay, and a new base pay, but new base pay is 50,000 because lump sum bonus doesn't become part of the base pay. Hence, the base pay in the second company remains at 50,000 only. So in the first year, the extra total cost to company is $2,500 same. But see over a period of time, second year, third year, fourth year, how this pay becomes more expensive, merit pay becomes more expensive. Year 2, payout, let us say 5% again. Now it is $2,625, 5% of new base pay 52,500. 5% of new base pay 52,500 is 2,625. So for our convenience, the year 2 payout is also maintained at same rate, 5% in second company also. Okay, so the amount is 5% of base pay. Base pay has remained same. How much it is? 50,000. So 5% of 50,000 base pay, the payout is $2,500 only. So I hope you are able to understand. Okay.
Yes, sir.
So 2,625. So approximately $125 extra. The employee in company 1, which has adopted merit pay, receives $125 extra compared to the employee in the second company, which has adopted lump sum bonus. So new base pay in the first company becomes 52,500 plus $2,625. It is $55,125 second year. Okay. So 52,500 new base pay plus payout of year 2, 2,625 is equal to $55,125. Okay. So what is the extra cost total? 5,125 compared to this basic pay in year 1, which was 50,000. Now at the end of year 2, the new base pay is 55,125. So what is the extra total cost? $5,125 in the company which has adopted merit pay. Okay, and now we look at the second company that has adopted a lump sum bonus. Second year, you have 5% payout calculated only on 50,000. 5% is 2,500. New base pay remains same because the payout doesn't become part of the basic salary. Okay, and extra total cost is 5,000. 2,500 plus second year's for pay for performance 2,500 only 5,000. So if you compare at the end of second year, okay, the company 1 has paid $125 extra. Now just over 1 year, 2 year period. Imagine over a period of 10 year, 20 year, what will happen? Okay, so this is how, okay, the lump sum bonus pay, lump sum bonus plan is less expensive in the long run compared to merit pay. Okay, so any doubts? Any doubts? This is a simple illustration. Okay. Okay, so it will take some time. It is another example of this company, Prometric Thomson Learning. Okay. Okay, and just a reminder to HR students, if there are marketing students also, today is the due date for submission of course teacher assessment. Your report is actually a thesis because it's a research. Okay, your thesis or report in a PDF file. Okay, and PowerPoint presentation, both should be uploaded into Google Classroom before 12 in the night. Okay, if you submit after that, it will take into late submission category. Okay, any questions? Still we have 2 minutes. Any questions related to the discussion today? Or any questions related to CTA?
So do we need to include declaration?
Do you need to include?
Declaration, sir.
Declaration is also required that it because it is your genuine work. Right? You have done it.
Okay,
you have not taken it from some other source, right? A declaration of
Yes, sir.
authenticity, that's it. If you have printed already, then don't do it. If still you are working on the report, then you can include.
Not yet, sir.
Okay. And
Okay,
last minute, some team asked.
I had doubt over duration and
Please ask quick.
okay, sir.
Or you can call if the meeting gets over.
And acknowledgement, declaration and acknowledgement.
See,
Okay, sir.
I have given you sample reports of your super seniors. Have you read them?
Yes,
Just
sir.
follow the same pattern. Don't deviate. That's
Yes, sir.
okay.
Okay, sir. Okay, sir.
Okay. And if by mistake, if any team has interviewed a less number of students, less number of respondents than what is specified, 120, 110, 100, okay. No need to worry. No need to conduct extra interviews. Just finish your report. Okay. But not too less. Like 120 is the target. Sir, only 20 I have done. No. Report will not be accepted. Okay then. So dear students, good day to all of you. Okay. So take care and submit the report on time today. Okay. Yeah, I'm going to end meeting now.
Thank you, sir.
Yeah, welcome.